Welcome to Mad Money. Welcome to Cramer. Other people make friends. I'm just trying to make a little bit of money here. My job, not just to entertain, though, but to educate. Explain like this, like today can happen. So call me at 1-800-743-CNBC. Tweet me, Jim Cramer. The hairs are split. The heads are counted. The deal is done. The Fed is cut. On to the next story. It really is like that in this business. Only the media seems to know that it's not. And insists on beating the story to a pulp when the ultimate judgment is all that matters. Got a rate cut. Yay! Here's the only cadence you need to know about a Fed meeting. It goes like this. We have a big event coming up. We think the Fed will cut probably a quarter point. Then we get exactly what we want. And the story has been written. If it's a cut, you buy, unless it's the last one. And with this president, it surely isn't. If it's a hike, you sell. All but your consistent growth stocks, it is. And that's really all there is to it. Even if that seems like the troglodyte's guide to Fed watching. So with the Fed meeting done and behind us, we can go about our business of buying good stocks that have been kept down while we waited for Jay Powell to take the Fed funds rate down a quarter point. And that's why the averages caught fire after the meeting, with the Dow surging 497 points, S&P jumping 0.67%, NASDAQ advancing 0.33%, and the Russell just going nuts. Now, I know there are lots of questions about the number of dissenters, the real rate of inflation, the exact payroll numbers. There's plenty of hand-wringing about whether inflation is above 3%, because historically it's not a great idea to cut rates when inflation remains high. We hear all this fretting about the red-hot AI business. Is it taking jobs or not taking jobs? We divine the narrative, the not-so-hot rest of the economy. Left out to stock buyers, these things mean nothing if you're going to buy good stocks. They're the questions that reporters have to ask, and Fed Chief Jay Powell feels he has to answer. But they're not particularly significant to you and me. Let me tell you the three things that really do matter. First, the Fed's still on the side of the bulls because it's still in easing mode, even if the current economic data is unclear. That means we don't have to fight the Fed when we buy stocks. Second, with the Fed done for the year, money managers aren't going to fight the tape. Stocks want to go higher. Money has been held back because there was always a chance that the Fed might not give us a rate cut. It'd be a surprise. It could really hurt. That didn't happen, though. So the floodgates are now open, and there's a jailbreak of cash going into the market. Thank you to the late, great Marty Zweig, a whiz of a strategist who explained the twin concepts of don't fight the Fed and don't fight the tape, and the inverse when you get it. We've got it. Third, when Powell cut short-term rates, long-term rates actually fell. Now, there's only one ultimate judge here of the Fed's actions, and that's the bond market. When the Fed started cutting way back in the fall of last year, the bond market rebelled and long rates went higher, which was very bad for the market. This time, bonds moved in the right direction, which makes Powell and his compadres look like they know what they're doing. Honestly, the bond market was my biggest worry coming into this week and the Fed meeting, but it turned out everything was fine. Sure, maybe it helped that Powell decided to buy short-term Treasury bills, a news story. Maybe he's telling the bond market sellers, hey, listen, think twice because you're going to end up being wrong. In the end, it doesn't matter. Rates went down. That does matter. So, one, the Fed is our friend, not our enemy. Two, the bulls aren't fighting the tape. And three, longer-term rates fell in response to the rate cut. It's a trifecta that allows the stock market to roar. What do you do in this situation? Well, you buy stocks that do better when rates are lower, even a quarter point lower. That means you buy the home builders and you buy the retailers that are connected to the home builders. You go with the ones that we've recently heard from. That means you buy Toll Brothers, which just reported a terrific quarter, but the forecast wasn't as positive. That means, well, the narrative could change, right? Now all they worried about a negative future, well, maybe it's a little more positive. We just heard from Home Depot, and it wasn't as strong as we'd like, again, because interest rates are too high. You still have a chance to buy it here. It's way down, now 100 points below where I think it should be. And the company offered an encouraging scenario if the Fed lowered rates when it gave you that update as an Investor Day yesterday. I'm going to talk about this on our Investor Day for the club on Friday at noon. It's going to be why you can buy a stock like Home Depot. Hey, you know what? You can buy the transports. They're thrive when rates go down. I think J.B. Hunt can be bought. The truckers, I never recommend them, but I think the long trucking recession's over. You can buy Federal Express because we're in the holiday season and Raj Subramanian is one great CEO. You can buy Union Pacific and Norfolk Southern because that takeover is a good one. Third, you know what you can do? You can buy the high flyers, the expensive stocks, because people will pay even more for their earnings or just their sales if they don't have earnings. They always do when you get rate cuts. It's just what the hedge fund playbook says you should do. And that's why the Russell 2000 index went up more than all the other indices. That small cap index is full of companies that don't have much in the way of earnings power, but often have rapidly growing sales. Basically, anything that trades on distant prospects many years down the road will do better with lower rates. Now, I'd emphasize going after the ones that are already winning for this year. How about this one? I'm thinking of the stock of Palantir. Even when it's already up so much, it makes a lot of money. It's not a flyer. It just got into the U.S. Navy with a terrific contract helping to build submarines more efficiently and much less expensively. I believe there'll be many more Pentagon contracts coming. Think surface ships, fighter planes, then weapons, munitions. It wouldn't surprise me if the whole arsenal of freedom goes to Palantir. It's precisely the kind of stock that works in this market. The ultimate high flyer that's up huge, that you can buy it right now if you're a money manager and show your investors that you too own Palantir. Finally, you can buy any industrial because the hedge fund playbook says that industrials benefit from lower rates, even if you think it doesn't matter. The fabulous irony of all this, frankly, is that Powell in his own press conference actually came out and said that a quarter point really doesn't mean that much to any industry. I had to laugh at that one. But that's not how hedge funds or even mutual funds think about it. They'll eagerly buy Caterpillar and Cummins, two stocks at their all-time highs, just because they perfectly fit the environment. Now, let's take a step back for a second and think like a portfolio manager when it comes to your own stocks. When you buy stocks, what you want is for the Fed to continue cutting rates. Investors never really like rate hikes, even when the economy needs them, because they're bad for stock prices. And I expect whoever replaces Jay Powell next year will try to keep the cuts coming. That person will be more of an emissary for the president than a let the chips fall where they may empiricist like we have with Powell. Long-term, possibly problematic. Short-term, market loves lower rates. We're going to get millions of new stock accounts because of the Trump accounts from the big, beautiful budget bill that are a fabulous handout to newborns. Gets them started young. I like that. New money coming to the market's always refreshing, too, and we have automatic money coming in from these accounts. And you know what? Let's keep it real simple here. We just got a very early Christmas present for Jay Powell. Please do not look a gift horse in the mouth. The bottom line, just make sure you don't get bearish when the time is right to be bullish going into the end of the year. And bears who are grumpy and unhappy, I expect you to come on our network and many others and tell us that the buyers are wrong, that I'm wrong, and even as the buyers are making money and you may be losing fortunes, well, you want to tell us how right you are. Well, that's the plight of a bear in what seems to be a never-ending bull market. What can I say? Can't please everybody. Jeff in New Jersey. Jeff.
Hi, Jim. Jeff from Central Jersey, a.k.a. Dr. ECE. You had a really monster fish I saw. I'm calling about Visa. My concern is that more and more places are charging credit card fees, 3-4%, and you're getting back 1%. The math doesn't add up. Will they lose transactions?
No, I just had a nice, really nice update with Visa just the other day. It was really quite amazing. They're doing incredibly well. Look, if you want to get into the business of credit cards that don't charge as much, I want you to go buy the stock of Capital One, which has been one of my big recommendations for this year. The club members know I think it's terrific. We're going to talk about it again on Friday. It did hit a new high today, but that doesn't mean anything because it sells at 12 times earnings. COF, Capital One, you know the ads? It should be in your portfolio, not just your wallet. The bears are welcome to come on TV and tell us why the buyers who are making all the money are wrong, because that's what these people know to do. But remember, the buyers are the ones who are winning on Mad Money Tonight. If you want to know how the consumer's faring, why not check in with their furry friends? I'm hearing all about the state of pet spending with the CEO of Chewy, a stock I like very much. Then, where do things stand with Deere after its positive investor day? I'm plowing through the numbers and showing you where I come down. A year ago, Service Titan came public on Trades Day. Now I'm getting a chance to sit down with the CEO, whom I've always wanted to, and get a closer look at this company that is, well, off its high, it might be an opportunity. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.